open data and organization identifiers. So I think in this final sort of session, we were going to turn to more practical next steps and consider how those open data frameworks need to be designed. Again, there's already loads of good points and ideas that have come through. And as was mentioned at the very start, we're keen to build on the open data guiding principles that were produced by the APFF working group last year as well. And because this discussion has been much more focused on trade specifically. So, do those same principles hold, or additional principles needed for the purpose of cross-border trade? To introduce new panelists here, well, Shalini, we've already heard from you, but it's good to have you involved in this conversation as well. We've also got Richard Robinson from Bloomberg and Paul Franklin from Siderius Advisory. So as we did with the previous panels, it'd be great to just hear a sentence or two from each of you on sort of your relationship to and interest in this topic. So maybe we could start with you, Shalini, and then go Paul and then Richard.
So thanks, Harriet, and it's a pleasure to be here and really great to hear the perspectives of a diverse set of panelists. Like, it just gives us a lot more food for thought for our internal implementation. So I am representing Digi Sehmati Foundation. It's a Section 8 not-for-profit company. We're working as an industry body, which is scaling up the account aggregator framework, which is India's, the framework is introducing open finance in the country. It is a regulated framework, but there was a need for a body to work at every aspect of that framework to make it really scalable and reach out to the masses. And that's what we do in India. So we are a close ally of the regulators and policymakers in India and making it successful in India.
So Paul Franklin from Siderius Advisory. I previously was leading the implementation of the consumer data right at the Australian Competition and Consumer Commission, and have also worked extensively in payments for many years. Among other things, I was involved in developing Australia's new payments platform. So Siderius Advisory provides independent consulting services on a range of digital initiatives from data sharing to payments. And I'm really interested in this topic because I do think there are really big opportunities to reduce friction. And just a comment, I think the anti-money laundering framework does aim to have some friction. It's not about stopping all money laundering. Part of the framework is about letting it happen and catching the people who are doing it. But data is key to that. If we know where money is flowing and where it's for legitimate purposes, it allows regulators to also identify where are there non-legitimate cases of financial flows that need to be investigated, and that might actually lead to uncovering an actual physical crime in addition to the financial crimes.
So Rich Robinson from Bloomberg. So my interest in the open data space from my title, I'm actually in charge of our strategy in regards to open data. Bloomberg does support 2 open data standards. One is the LEI, which we've talked about, which is ISO standard. We are the largest LOU, local operating unit, for issuing LEIs globally. The other is the FIGI, which is Financial Instrument Global Identifier. That's a standard of the Object Management Group, and recently also standards of Brazil, as well as a US national standard. So that's for identifying financial instruments and actually a data model for identifying financial instruments. The interesting thing about FIGI is that it actually incorporates the MIT open source license within the standard. And then for LEI, which I think is important, has the global open data policy that they go by. My other interests are in data. I represent Bloomberg on a number of industry working groups and organizations. One of the things which relevant to the payments people probably is I'm co-vice convener of the registration management group for 20022, which is also open data standard. So
Great, thanks all. It's really good to have you here. And so sort of kick things off, Shalini, we've already heard a bit from you around like the work that you're doing in India. And it'd be good to just like get into a bit more around like key lessons or principles you think from your experience of supporting trade within India and how they might scale up from within country to sort of that cross-border payments and trade looking forward.
Yes, sure. So I'll just start with a quick intro of what India has done as a country in terms of open finance. So like I said, open finance, so we had gone beyond open banking. In fact, the central bank has actually opened up open finance in the country with all 4 financial sector regulators, which includes banking, insurance, pension, and securities regulators coming together and supporting a framework and opening up the data to each other. So it is a truly cross-sectoral data. We've not limited the data sets to start with. We've got 15 data sets that are available on this framework. And recently there is a taxation database, which is GSTN, which captures the goods and service tax information related to MSMEs on the database. And in fact, that's expected to be a big enabler for MSME trade and financing in the country, because you have now access to real-time invoicing data of the MSMEs in the country. Very crucial to estimate their turnover and do cash flow lending. So all in all, it has been a very broad-based framework. 700 financial institutions have already onboarded the framework. Around 6% of the population in the country, which is 70 million consumers, have already used it. We've seen a disbursement, loan disbursement of around 50 billion USD happened over the last 1.5 years. So all in all, it's been quite successful, big, but in a country like India, where it's still small, we just touched the lives of 5 to 6% of the Indians. And as we move forward, there is a lot more that needs to be covered. We have followed a federated interoperability model. We have unbundled the consent managers. So from a consumer data security and privacy, we've introduced a concept of consent managers who are entirely managing the consents of the customer in a very explicit mode, which is very granular. And that is serving as a digital trail of what a consumer has agreed to. So that is one of the key highlights of this. We are also gradually moving towards open data. Similar initiatives are happening in the health sector, agri sector, but they are at different stages of evolution. We recently passed a Digital Data Protection Act, which will come up with a legal framework for any kind of data exchanges happening in the country beyond the financial sector. And we expect that to be something which will lead to an open data-led economy in the country. I've already spoken about the impact it has created, but 30% of the lending that has happened to the MSME sector. And that was just before goods and service tax was added to this framework. And we expect that to increase significantly as we move forward. So in terms of the early learnings, the way India has built upon is we build a foundational infrastructure step by step. So we started with building an identity, giving an identity for every individual. And it's not just an identity, it is something which can be verified digitally on a real-time basis. And on daily, we are authenticating identity, 100 to 120 million identities in the country for different kinds of flows. And almost 80% of the banking sector today, I mean, the more evolved digital lenders are on digital identity and verification, though there are variances in the adoption. While we have done a lot of work on the consumer identity and individual businesses where the individuals are sole proprietor businesses, there is a lot more work that needs to be done on the entity level identifiers, and that we hope to see as we move forward. Second thing which we have as a lesson and which can be very true even for the open data initiative that we are discussing here is that we've kept it very simple and flexible according to various sectors and consumers. So it's not as if there is one identity, right? India as a country, there were multiple identities which consumers were using. So instead of that approach where everything has to be implemented in one go, we kept it very simple, where the identifiers, there were multiple identifiers that were used to source open data. So for example, phone number, a combination of a phone number, PAN, which is your taxation number in India, and your date of birth was used as a combination to discover and identify and share data, instead of making everything linked to Aadhaar, which everyone had, because the databases, source databases also need to be updated with the identifiers, and that was not the case in India. So very graded approach. Like I said, we started with very small use cases rather than just going and doing it at a huge country level scale. So that was the second thing, start with something which is very, very specific to a sector, and broadly then increase, the based on the scale and the risk perception, improve, mechanism to secure the flows. Like in UPI, we saw when we started, it was a single factor authentication with a transaction limit of just 2,000 rupees per day. But as the system grew and scale came in and usage came in, the transaction limit was increased, but we introduced a dual factor authentication for someone to be able to transact digitally. And that's what we are planning to do in the open finance space, data space as well. And another thing was that the entire framework is very consumer centric. So any decision you have to take, the first question, especially we as an industry body ask, is how is it benefiting the consumer and how is it safe, preserving the data of the consumer. And that makes the decision very easy, right? Because there are no ifs and buts about it. You tend to build infrastructure that is serving the end consumers. So some of the challenge, so these are some of the principles, like start with building a foundational infrastructure on identity, which is digitally viable, keep it small, simple, keep it flexible according to the needs of various countries. Start with low value, small use cases so that you don't kind of expose a large population to it immediately. And, you ensure that you can take graded approach to regulation. So broadly, yeah, some of the learnings that I can share.
Yeah, thank you. There was loads there. That was really insightful to share that. And thinking how best to sort of bring this together with the others as well. But I think one aspect you talked about there, it's like a key point to highlight, was that federated interoperability model. So Paul, it might be a good sort of think around like how that compares to the experience in Australia as well. And I think interoperability is like one of those key themes that was coming through the principles, the open data frameworks from last year as well. And like, where do you see that real need for interoperability to enable the cross-border payments? Is it about like the interoperable standards or the interoperable technology, or is it even about interoperable regulation, those sorts of things?
Well, I think there's certainly a standards aspect to it, and that's particularly that you need to maintain any data that exists in one ecosystem. You should be able to allow that to flow through to other ecosystems. And there's a few areas where we've had success in Australia. In particular, we launched the new payments platform in 2018 that's now becoming sort of, more on the way to being ubiquitous. And the Treasury has a plan to turn off some of the legacy systems by 2030. So that's a payment system that, because it uses ISO 20022, is capable of carrying through data about each of the parties to the transaction. That's very important. In Australia, we've also recently launched standards to allow connection of cross-border payments into that domestic payment system, so that when a cross-border payment occurs, those can flow into the data can continue all the way through the transaction chain. And I guess for the consumer data right, or for data sharing regimes, you want to make sure that the data that flows through the payment systems can then be reported back to the recipient, either through the bank or through alternative providers. And that work of uplifting payment systems, it's really hard and really slow, and not just to build it, but then to migrate everybody over a period of time. For a system that was launched in 2018, the legacy systems won't be turned off till 2030, but by then you'll have very rich data. So I think there's certainly a role for standards to make sure that you can carry all of the data that you need, and reflecting local variation, but also moving towards global standards as you can. I think there's a role for regulators. You don't necessarily want regulators designing use cases because they might lack a commercial imperative. But when there is a commercial imperative, it's not always the party with the commercial imperative who needs to make the choice to participate. So there is sometimes, I think, a case to mandate certain data elements or certain behaviors when there's a compelling social reason to do so. And I guess it's a slow journey. You can build an ecosystem, but then it's really about the adoption and identifying opportunities to share data. That's really important. And I should mention, while I've mentioned the new payments platform, Australia, like many other countries, has also uplifted our high-value clearing system. So, there's a progressive work towards adopting new standards. I guess the challenge is, how do you preempt what's coming next around the world so that we can make standards somewhat future-proof?
Yeah, great. Thanks, Paul. So it's in future-proofing, it's probably the frameworks remaining flexible to be able to change and take on those new standards as they are developed. And Richard, keen to get you involved too. One other theme in the principles from last year was the need for public and private sector collaboration in the design of open data systems. So should this remain a priority for the purpose of better enabling cross-border payments? And what would be key considerations related to this in the design of those frameworks?
Yeah, I think it's really important. I mean, we've mentioned regulation and standards, and a couple of things. First of all, standards are probably misused and misunderstood in many cases because those who aren't involved in development or that esoteric group that's involved in the creation of a particular standard, anybody from outside tends to think it was built for them, and if it's good enough, they'll shove it in and get it to work. Which, interesting enough, I was having a conversation with a member of one of the Federal Reserve banks last week on this topic, right? Where does regulation come in? Regulation, in a lot of cases, if they don't have that private conversation, the private-public collaboration, even if it's principles-based regulation, it may miss the mark. What are they trying to accomplish? But do they actually understand what the implications are and how that private operation works? What are the processes that are actually going to be impacted, as opposed to what they are intending to get? From a private-public cooperation perspective, private companies are where you're going to have the capital in order to build things like standards and contribute the experts to those efforts, right? Especially the larger companies, and hopefully benefiting the SMEs in doing so and bringing them along. But having the public institutions there, they can discuss what are the goals that they're really trying to accomplish. So you're not just building things for competitive advantage purposes, but you're actually building towards public good that has purpose, that is going to encourage adoption, encourage transparency and data quality, while also encouraging competition at the same time. Right? So that's a lot of asks right there, but the only way it can do it is if both the regulators and the public institutions have a proper appreciation and understanding of the private company needs, and the private company needs are aligned with what the public institutions are trying to accomplish in their oversight and attempts. I mean, no one wants to support trafficking money or human trafficking or anything. Everybody in the private world wants to try and prevent money laundering and illicit activities. Just need to cooperate on the tools that they need to build together in order to do those things. And the only way to do that is for those collaborative activities to continue. LEI, right? I mean, a lot of that was built out of discussions between CPM and OSCO and the private sector in discussing how do we go about and solve for this. Unique transaction identifier, unique product identifier in derivative space. Again, public-private collaboration, a lot of open conversations, meetings together, not things being handed down on high from regulators or private industry running off and saying, here, use this, right? It was working together in order to accomplish those goals.
Yeah, thank you. That all makes a lot of sense. And just sticking with you, Rich, as well, I guess I pulled out public-private partnerships as a key theme coming through, but are there other sort of key principles which you think should be considered when we're talking about this payments across borders, like more broadly?
In regards to public-private partnerships?
Not necessarily, it can be, but just opening it up based on the conversations today.
Well, again, I mean, the interoperability aspects were already covered, standards, allowing for competitive solutions to be allowable, and not just mandating one thing. So you have things like the RLN is out there, but also you have other payment rails, you have other digital options, you have when looking at these, the focus should be on how do we get these things to interoperate as opposed to picking winners and losers. What works for one jurisdiction or one sector of the market may not work for another. So how do we get them to work together? Actually, the governor of the Federal Reserve banking system gave a discussion at the TC68 plenary I was at, ISO meeting I was at last week. And one of the things about that was how they're revitalizing the federal payment systems, but still enabling, there's 4 different payment systems within the US for different purposes, ACH, FedNow, FedPay, and they all serve different purposes, but they are focusing on interoperating between those in order to facilitate better data quality, faster payments, and more access for the consumers.
Yeah, thank you. And I'm happy to sort of open up Paul and Shalini. I don't know if you've got sort of additional principles or points that you're keen to make. Paul, go to you first.
Yeah, I guess I'd mirror the point that you really need collaboration between the private sector and regulators. There's no, regulators who don't understand the private sector pressures can make misguided choices, but also, sometimes there's a public benefit that needs to be imposed, and those things need to be carefully balanced. But the best thing for an ecosystem where there's a high degree of innovation is to make sure that you've got the right set of facilitating regulations, so you can actually legally do the things that you want to do to innovate, and to make sure that regulations don't impede people who have legitimate innovative solutions to implement. And it's a difficult thing. Every private sector participant has their own views about what's the right solution, and it's not a regulator's role to create a business for somebody else. But there is, I think, a case for private sector participants to engage with the regulatory community to make sure that the issues are understood, and that where there's opportunities for helpful regulation, that those can be taken. When I left the banking sector to go into a regulator, one thing I found was it was just difficult to get people to tell me what they really thought, which was, quite an odd situation.
Yeah, I feel like I can appreciate that, coming from a government background as well. And just to sort of wrap up, I'm just keen to come back to you, Shalini, if you had any other final points that you wanted to make here.
No, so I have already spoken about how regulators need to just get in the enabling framework first, and then leave it to the private sector to innovate. But going as we move forward and as it scales up, there is a need, and the approach we are taking in India currently is embedding policy as a code. In the sense, it's almost impossible, practically impossible for the regulators or even a self-regulatory body to keep a eye on some 15,000 odd financial institutions who will be participating in the pilot, in the open finance project that has been rolled out. We're already at 600. So there is a lot of discussion around how do you embed regulation as a part of the technological processes, the standards and the flow, and any deviation or detection can be done on a real-time basis, starting from simple things like, the parameters of the consent which a customer has given, or a FIU, the financial information user is requesting for, is matching up with a reasonable set of parameters that has been agreed by the industry. So can that be done on a real-time basis? On a real-time basis, someone can just red flag the ones which are potentially deviating from that, and then possibly take some deterrence against those flows, even stop the flows in extreme situations. So a lot of these things need to be automated. Today, we at Sehmati are looking at technology to kind of, ensure that regulations are implemented, and not just doing a post-facto analysis of what went wrong. In fact, a lot of the discussion around AI, which happened on this group, may be very relevant in implementing these kind of flows. But that's where we are aiming for as we move forward. It may take a few years, but that's the direction we have taken as a country.
Yeah, awesome. Well, thank you so much all.